Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Aris Mining.
The battery metal space is heating up. This is Paul Harris for Kitco Mining at Resourcing Tomorrow in London. And joining me today to discuss this is Matt Fernley, founder and editor of the Battery Materials Review. Matt, welcome back to Kitco.
Thanks, Paul. Good to be here.
Now, we're at Resourcing Tomorrow in London, as I mentioned. COP28 is about to start in Qatar. Virgin Airlines apparently has just flown the first ever commercial flight using renewable fuel. The world seems to be starting to get the big picture about climate change and the role of mining to help decarbonize the global economy. Is that a fair reflection?
Well, I think in some ways, yes. In others, no. So we obviously have a situation where I think the energy transition has a lot more exposure in the press, in common literature, than it has in the past, which is also the good. But I think we have some issues whereby we have politicians in particular potentially pushing back on some of their climate targets. And we see that a lot, for instance, in the UK, where Prime Minister Sunak has pushed back on the clean vehicles from the original 2030 target to 2035. And there's been a lot of speculation in the press that more clean targets are going to be sort of pushed back as well.
And that being the case, Matt, what is the reason for the pushback? Is, politicians usually side, the economic cost is too high. But in this particular instance, is it that the minerals aren't necessarily available in order to be able to achieve those targets?
Well, I think that certainly was an issue 2 or 3 years ago. It's less so today. As we speak now, lithium prices are hitting multi-year lows. Nickel prices, cobalt prices are all pretty down lows. So certainly that was an issue, and I think it is likely to be an issue in the medium term. But I think really for politicians, it's the economic cost. So I think now the story's out that the energy transition is going to be inflationary. It's going to hit people, ordinary people, in the back pocket. And I think that's one of the reasons why politicians are starting to lose a little bit of their, enthusiasm.
Well, it seems that the Business Design Centre here in London and Resourcing Tomorrow are doing their bit. They've obviously not got the heating on today, perhaps trying to save on Russian gas. But looking back on 2023, how has the energy transition and critical minerals narrative evolved this year? And what have been some of the milestones for you?
Yeah, I think it's been a really interesting year for the energy transition and the battery raw materials and the rest of critical mineral space in particular. It hasn't been the best year, to be fair. Most of the pricing direction has been down, and I think that's made a lot of the headlines, particularly in the lithium market, where I think people assumed it was going to be a straight line, 0 to 60, as it were. But I think that, we've had a number of areas which have been of interest. The continued focus on the IRA, government funding sort of percolating out. China has been very interesting. The export controls on gallium and germanium, and then the potential export controls on graphite as well. So there have been lots of really interesting points in the space that have certainly kept analysts on their toes, I would say.
Now, you mentioned some of the funding that's becoming available from the Western world, the IRA in the US in 2022, obviously being a landmark piece of legislation in that respect. Canada is increasingly looking to join the party. They recently announced a $1.5 billion Canadian dollar funding package for critical minerals infrastructure, the Critical Minerals Infrastructure Fund. How significant is that for Canada?
Well, I think it is significant insofar as it's focused on the upstream. And I think one of the big issues that we've had up till now with funding, in the EU, in the US, elsewhere in the space, is that most of the funding's been focused on the midstream and the downstream. And we haven't really been able to attract very much.
So that's very much the processing and the final products.
Yeah, the processing and the final product, cathode manufacture and R&D and things like that. There's only really been 2 countries in the world that have focused on the upstream. There's been the Australian government, which has made funding available for upstream. and also the Canadian government. And earlier this year, the Canadian government made exploration flow through a key funding instrument. And that's been really, really important for the upstream part of the industry, the far upstream part of the industry, particularly for the juniors. And I think this is a move in the right direction. A lot of people say, well, 1.5 billion, not a hell of a lot of money. But you just need to catalyze project funding. You don't need to go out and produce the entire funding for a project, but you just need to start making funds available kind of to encourage other people, other funders to come into the market. And I think it's really, really important now for governments to be involved in funding, because obviously with equity markets, with prices so weak, with equity markets so weak, there isn't the equity available that there was potentially over the last 12 to 18 months. So it's really, really important that governments come in, make grants available, make loans available, that debt financiers come in, because it's definitely a very difficult time for junior and mid-tier miners to raise money.
Being that cornerstone investor, I think is a very real and significant function of this funding. But also, does it transmit the message that the government, the federal government, the provincial government in this instance, says that this project's okay, we would like that to succeed and advance?
Yeah, I think it does. Certainly initially, maybe they'll take a more scattergun approach later on, but certainly having, government funding committed to your government, to your project, gives, potential other funders a little bit of confidence that, the Canadian government has come in and said, well, we think this project's worthy of getting funding, therefore, we believe in it. So I think that every little helps in the junior mining space, as it's pretty difficult to attract money, particularly for the upstream.
Yes, and on that, Matt, it's been a tough time for juniors. As you mentioned, it's very difficult, very tough conditions to raise equity. And so having that upstream flow through helps, but still it requires other people to write the checks. Why is the government seems to be sort of reticent to actually put its own money into helping exploration companies make discoveries and advance them to the point where other funding mechanisms come in?
I think part of the issue with exploration companies is, as you and I know very well, the problem with exploration companies is you back 10 of them and maybe one of them makes a good hit. So, governments look at it and think, well, maybe is that a great use of my funds, when maybe if I wait a little bit longer for a company that's made a good hit, as a viable project, I can make my funds work better. So I think that might be one of the issues behind the reticence in funding exploration projects. But there's no doubt that there is a big issue with funding early stage projects, not just within battery materials, but within the industry as a whole. And I'm including sort of copper and other base metals in there as well. And I think it comes down to this issue of lack of understanding of the importance of the critical materials, raw materials supply chain, and the need for primary production capacity.
With the scarcity of the amount of critical minerals coming available into the market, particularly in a timely fashion to help facilitate the energy transition, will the applications just continue to use the dirty minerals or the conflict minerals that are receiving a lot of criticism? So I guess, a phrase that's been coined by US Senator Joe Manchin is mineral laundering. Is that going to become more of a thing?
I don't know about become, it's already more of a thing. So, we've been very surprised over the last sort of 12 to 18 months that a number of, for instance, the major OEMs have signed up to support Indonesian nickel projects. When they're very carbon intensive, they're very power intensive, they're polluting in groundwater, there's a lot of deforestation associated with them. Why aren't you going in and supporting, for instance, the Canadian nickel exploration and development industry, which is significantly less carbon intensive, maybe 4 or 5 times less carbon intensive, maybe more than that. So, there is there's been a justification around ESG circles for the last 5 or 6 years that the downstream, that the end users would be happy to pay a premium for clean material, but we've never seen it. And I think this is one of the big issues that needs to sort of come out and investors need to look at from an ESG viewpoint is companies' supply chains. And I know that, for instance, the fund that I advise removed Volkswagen as a long position when they signed that nickel deal. And for us, the exposure to this pretty dirty Indonesian nickel is equivalent to exposure to child labor in the DRC. So why aren't companies looking at it in that way? And I think it comes back to still a lack of understanding of how the mining industry works.
The geopolitical aspects are fascinating. Let's stick in with Indonesia. Indonesia wants the US investment in its nickel business to help advance and develop that. But that will put the West perhaps increasingly on a collision course or headbutting course with China. There's also aspects of that in Africa, in Latin America as well, where China is sort of deploying funds and resources, almost hand over fist. Well, what are some of the geopolitical aspects of these developments?
Well, I think it's very interesting. I mean, I don't think that the IRA, as originally envisaged, was envisaged as a geopolitical strategy to advance US influence in all countries in the world. It was envisaged, I think, as a strategy to secure America's supply chain for critical raw materials. So I do think that, Argentina and Indonesia, where China dominates a large amount of the supply base, are quite unlikely to get into the IRA, given the US government's stated views on Chinese influence. And I think there also has to be an affordability issue here, insofar as, surely it's down to the IRA to focus on closer field projects, long-term allies of the US, rather than sort of pushing out into parts of Africa and far Asia, where it doesn't really have, friendly ties, hasn't ever had friendly ties. I mean, I think if you open the IRA up to Indonesian nickel, into African supplies as well, the affordability issue really comes to the fore, because even with what we've got at the moment, just on the cell side, the EV side, the IRA is already set to cost 2 or 3 times what it was estimated to cost in 2022. And I think if you open up all of these raw material areas to it as well, it looks pretty unaffordable for the US economy, really.
There does seem to be elements of sort of overreaching aim or ambition in some of this. Another geopolitical aspect we haven't mentioned, or player we haven't mentioned, is Saudi Arabia. Now, Saudi Arabia is perhaps looking to move away from the petrodollar system. They're very much looking to develop their own mineral industry and mineral processing industry. They're really looking at changing their role. They perhaps see the writing on the wall with the energy transition, and they're looking to adapt and adjust to this new reality. But in the same time, becoming perhaps a geopolitical competition for the US and or China.
Yeah, I mean, I think the Saudis see an opportunity for themselves to set up as a mineral processor, potentially to rival China, if they can introduce their own clean power, renewable power, and can attract some of this power-intensive processing. Then they can potentially set themselves up as a competitor to China going forward. And the Saudis, for instance, are pretty active at this conference, and pretty active in the mining space at the moment, making funding available. And I think the Western countries have to make a decision. On the face of it, Saudi looks probably more palatable than China as a center for materials processing. But once you draw down into that in a little bit more detail, do you still want to offshore your processing to another major power, or do you want to build up your own supply chain domestically, or with your direct allies? And I think that while there is the potential to develop a Saudi industry from a security of supply standpoint. Even though we spent the last 20 years outsourcing our manufacturing, we've really got to bring them back into our own economies, because otherwise you're sitting on a very, very substantial risk factor in your new economy supply chain, I think.
Thank you, Matt. So briefly, looking ahead to 2024, what are some of the things that you think we'll see next year? What are some of the things you hope we will see?
I hope we will see a balance in material prices. I hope we will see a return to economic growth in the Western world, less pressure on the consumer, therefore accelerating EV sales, accelerating demand for manufactured goods. If we get that, then I think that will feed through into metals prices for the bulk of the critical materials. So I'm very much hopeful of that. I think we will see very much focus on the cost curve and on where the marginal cost producer is, because that's the level where you start to bounce off. I hope we will see more funding made available for the upstream mining industry. I unfortunately expect that a number of junior miners will fall by the wayside, because certainly for the next 3 to 6 months, I don't see a lot of funding being available in the equity markets. So I do think that, things are going to change with regards to the number of junior miners in this space. And I also think that there will be continued failures to bring on supply. So, we've already seen it just in the last couple of weeks with the lithium market, with more production slowdowns, projects being pushed out. And I do think that people's assumptions on supply are unrealistic in the current market, which could make markets tighter than a lot of analysts are suggesting that they will be.
Well, we'll definitely have to catch up next year and see how your sort of predictions there go. Matt, thank you very much for joining us today.
Thanks for the invite.
And this is Paul Harris for Kitco Mining at Resourcing Tomorrow in London. If you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Aris Mining.